Well, it's time for today's three stock lunch, where we look at the three big movers of the day. Here with our trades is Scott Nations. He's founder of Nations Indexes. Up first is Meta. Those shares surging after the company reported a tripling in fourth quarter profit and issued its first ever dividend. So, Scott, what's your trade on this name?
Meta's a hold. And Courtney, I mean, it's a real hold, not a pseudo sell. Congratulations, up 21% today. Biggest gainer in the S&P 500. But it's a hold because of valuation. It's up 150% over the past 12 months. Forward PE is now 26, which might seem reasonable, but how does a $1.3 trillion company grow into that? I think part of the problem is AI. I think the perception has gotten ahead of the reality. The company's cutting headcount. That's going to help EPS, but they have regulatory hurdles both here and in Europe. And you can't discount the ick factor regarding dangers to children that Zuck had to put up with earlier this week.
Yeah, that's right. He has had quite a busy week. Surat, you are a holder of Meta.
We are. I agree, but I will be trimming some of it. It's just gotten so far so fast. I want to take some of the profits off, but I will still own it. And I also think because you also got the cross currents of what's going on regulatory, but also you've got a tailwind of advertising this year because you're in an election year. So I think take the profits, a lot of that's baked in, and then kind of see from there.
Good point.
All right, let's move on to our next stock, which is Comerica. Shares down around 7% this week as woes stemming from that New York Community Bank Corp situation, reignite fears for regional banks. Your trade on this one, should you buy the dip here or is it a stay away?
No, Tyler, this is a sell. It's a tough business to be in if you're a small or regional bank. You're under extra scrutiny. We see that going on this week. It's because depositors are demanding higher rates. And for something like Comerica, the problem is that the price to book is almost exactly equal to what it is for Bank of America and Wells Fargo. And those big banks can enjoy economies of scale that somebody like Comerica can't. Company's also in the middle of its 52-week range for the stock price, so there's room to the downside. Management screwed up a tech upgrade this summer, and then they just need to really be doing a good job when it comes to the nuts and bolts. They're closing branches. That's great, but it's just an incredibly tough business to be in, and I don't want to be along for the ride as a shareholder.
All right, there's a definitive sell. Surat, thoughts on this company or the regional banks generally?
I completely agree. I think given what we saw with New York Community Bank, given some of the smaller regionals, their transparency is really not there. We don't really know what's under the hood. If you're getting the same valuations, we own Bank of America, we own Morgan Stanley, JP Morgan. I'd rather be with the big guys, more diversified, better balance sheets, as opposed to, hey, if this thing was trading at a big discount, then one would ask why as well. So I think at this point, you're probably better off, hey, let's just find out what's under the hood and what's going on, especially if the price is the same.
I think your friend Frank earlier in the show that we had on was also a little apprehensive about regional banks in general. Well, finally, McDonald's, the fast food chain, set to report fourth quarter earnings results. That's on Monday. Shares down slightly today, but up about 12% in the last year. So, Scott, what's your trade on those golden arches?
This is a buy. You pointed out they report on Monday. EPS expected to be $2.82 a share. That would be a year-over increase of 8.9%, which is pretty good. And I like the fact that they've done a good job of handling inflation. They seem to be able to get the employees they need despite an incredibly tough labor market that we learned more about this morning. Also, I like the fact that they're getting into higher margin products. They're going to be butting heads with Starbucks in that regard a little bit. But, you know, for somebody like McDonald's, higher margin products is just wonderful. It's a tonic for the bottom line. And it's a wonderfully managed company. It's a buy.
All right. Thank you, Scott Nations. But before we wrap it totally up, Surat, what do you make of McDonald's?
I think it's a great company. It's just valuation for me. It's just a little more expensive than I would like. I think you want to own a McDonald's type company as we go into a slowdown because consumers will start coming downsized in terms of what they're going to spend. So it's just an entry point. I think great management team. I think they've done a great job in terms of their product selection. The entry point is what I'm looking at.
I'd love to have bought it there in October, huh? Yeah. It's a nice little climb from there. Scott Nations, thanks very much. Surat, thank you as well.